Peace, guys. What it do? You already know who it is, the Price Action Junkie, and I'm here with a very, very powerful presentation today. I'm actually kind of excited to be presenting this information to you guys. I'll be giving it in a derivative in a way that I was taught myself, in a way that I learned this concept. We're going to be learning about manipulation, accumulation, and distribution, also known as the power of three. Okay. So when we speak about the power of three, right? And we're speaking about manipulation, accumulation, and distribution. There are going to be some important concepts here that we're also going to want to remember to talk about when we're speaking about the power of three. And that's being able to predict price movement, and that's also knowing about range expansion. Okay. So I'm be able to predict price movement by understanding range expansion and the power of three cycle. All right. Power of three cycle. And then predict price movement, range expansion. Okay. So now when we are talking about manipulation, right? Manipulation, guys. Manipulation is the inducement, right? Excuse me, I can't type for my life. Is the inducement of smart money opposing traders and engineering liquidity into the market. All right. So now when we talk about accumulation, accumulation is the collection or building of orders, right? And this could be either long or short positions. And finally, when we're speaking about distribution, distribution is the ending of the cycle. It's the ending of the cycle after a pairing of orders. It's the ending of the cycle after a pairing of orders. And today, we're going to look at manipulation, accumulation, and distribution in a daily range cycle, right? So we're going to look at the daily range power of three cycle. And we want to take into consideration being able to predict price movement and range expansion. So these are concepts that we want to be able to grasp by the end of this presentation. So here you see we're looking at a daily range between the 29th, excuse me, the 29th of December and to the 30th of December, but I rolled it back one cycle, right? One session, because we're on the 5-minute time frame, looking at the pound Aussie, right? The British pound versus the Australian dollar, right? So I would have it here, but that is going to be the open of the next day. So I actually want to have it here where we can see where price closed at. And this is the open of the daily range that we are actually doing this case study over. Okay. So when do we expect to see manipulation, right? Manipulation is going to occur at the open, right? So see that the opening price is here. And what happens? Oh, excuse me. I'm going to type this in. This is the open price. And what do we see as soon as price opened, right? Initially, price opened long, right? Initially, price opened long, slight retracement, and began to trade higher, right? Then we experienced something very, very key. We experienced something very, very important in the formation of these power 3 cycle. This is when we witness the inducement come in, because traders who were long here weren't wrong. They were actually correct in their bias, because in a bullish scenario, right, we're looking at the power 3 in a bullish scenario, they were long here, so they were correct. But the market makers will look to engineer liquidity into the market. And this is how they do it. They do it by manipulating price. So they would knock out these initial buyers, tap into their sell stops, right? Taking out short-term lows. And in the meantime, they will also be inducing sellers into the market, right? So this right here is the initial manipulation. We see this after price opens. So we see that manipulation happens. And what happens as a result of manipulation? We have inducement here. We have an inducement of sellers. Here, sell stops activated here, because you see that this is a pool of liquidity. Right, this is a pool of liquidity, sell side specifically. Sell stops activated, and traders who are looking to break out, right, because they seen that the market repriced lower than these lows. So breakout traders will be looking to catch this breakout and a continuation to the sell side. And then the market did what on them? The market began to actually break down here. We see this slight consolidation. It's short, right? Doesn't seem that much. Realize that we are on a 5-minute time frame. So even if we scaled in on a 1-minute time frame, we would still see a lot more depth in this consolidation. And what this consolidation is actually accumulation. This is an accumulation. Excuse me, guys. This is now an accumulation of long positions. Right? This is an accumulation of buys. Here, we have the accumulation of buys. So price open, initial rally up, manipulation down, inducing sellers into the market, and also engineering liquidity. Engineer liquidity with an inducement of sellers. Then we had an accumulation of buys here. So smart money traders were buying at lows here. buying here, buying here. They bought down here at this low. We're gonna make this a dark green so we can see it. Can't see it too good. Trying to get it where I can see it, but I got this green on green going on, right? So here we see we have an accumulation of buys before price expanded up to the upside. And in this expansion to the upside, we'll be looking to target what? Old highs. So we'll be looking to target old highs. This high was taken out. And what lies above this high? Buy side liquidity, right? And we've seen that the high from yesterday was also taken out, right? Now we want to determine an area where this market will actually go. So a good way to do that is to get specific and see, okay, what is the previous day's highs? If we're looking at on a daily range, right? Where's the previous day's high? The previous day high is here. We've seen that this was in a bullish scenario as well too. So the previous day's high is here. We can annotate that there. And we see that this high was in fact targeted in this daily range. What is this to here in the previous day's high? Liquidity. Buy side. To be specific, let's make this green here. So the previous day's high was targeted. Now, we've had open price, we've had manipulation, engineered liquidity into the market, and induced sellers into the market, into an accumulation of buys and these. And then we had a price expansion ranging higher, attacking old highs and attacking the previous day's high. And now what we see here is a pairing of orders. This is what happens in the ending cycle during distribution. We have a pairing of orders. And what a pairing of orders is the same as what we've been talking about, how smart money bought down here. So they'll be looking to sell out of their long positions up here. They will be looking to pair their sell orders with pending buy interest here. Because remember, these buy side liquidity exists in the form of what? Yep, you're right. Buy stops. Buy stops. So there's pending buy interest up here. In order to sell something, you need willing buyers. In order to sell something, you need willing buyers. So there's pending buy interest up here above the previous day's high. So we see that this high was in fact targeted, and these buy stops were in fact activated. And then we began to see the end of the cycle here. And this is where distribution ensues once these long orders have been paired here with pending, once these short orders have been paired here with pending buy interest. Now we see a time when the market begins to actually retrace from here. And we actually see a accumulation of short orders. And the market begins to buy at the highs, and then the market takes off. All right, that's what we're seeing here. I actually don't like that, guys. I gotta do it over again. So we've seen that these buy stops are activated here. And then we began to see an accumulation of short orders. Buying at the highs here, came back up, bought at this high, sold at the high. I'm saying buying at the highs. These guys are buying at the high. So now we're seeing an accumulation of short orders, right? And then price began to reach for these short-term lows. Looking to reach for these short-term lows. Here, got out of these short positions up here, came back, mitigated this order block. And then what did we see happen after that? We saw again reaccumulation. Buying here, so me selling here. Reaccumulation. And then we began to see price basically do this and reaccumulate sell positions. And then they ended up repricing lower at the close of the day. That is the power of 3 cycle, right? So seeing here we have distribution up here. Right? Distribution after pairing of orders. Right, we saw distribution after pairing of orders. And again, what is pairing of orders? I'll put it down here so you guys can have it. Pairing of orders is matching. Well, I'm going to be specific here because we are in a bullish scenario. So it's matching short orders with pending buy interest. We're on a bullish daily range here, guys. Excuse me, I meant to put that there earlier. But here we are, right? A pairing of orders is matching short orders with pending buy interest in a bullish daily range scenario. So we see here that price opened, right? We had the opening price here. The market rallied up, then manipulated buyers right out of their spot. These guys got tricked right out their bag because they were correct. They just got in way too early. So we've seen that they got tricked out of their spot. Liquidity was engineered by tapping into this sell side liquidity pool. Sellers were then introduced into the market. They were introduced, or should I say, induced into the market. And then we've seen that there was a collection or accumulation of long positions and buy orders by smart money. And they bought and repriced, attacked old high, attacked the previous day's high. We've seen a market making parent of orders here because they were looking to sell out of their long positions. In order to sell out of their long positions, they needed willing buyers. So they paired those short orders with these pending buy interests here, began the distribution process of the daily cycle. And we saw an accumulation of short orders. The market repriced, taking out equal lows, short-term lows. And then the market rallied higher again, mitigating this order block, tapping back into this liquidity pool. We saw again reaccumulation of short orders, reprice lower, taking out short-term highs here, tapping back into this liquidity. We tapped back into this liquidity about 3 more times before price ultimately began to reprice lower heading into the next day. And what you guys will come to realize if you look for this exact pattern, you will be able to find this pattern happen, right? You'll be able to find this cycle happening on a daily basis. I'm not saying it's going to happen on a daily basis in the pound Aussie, but generally speaking, this is how the algorithm reprices the market. Open, false rally lower, repricing higher, attacking no highs. Right? So let's just see. Let's just see if we can scroll back a day. All right, so we're gonna take a look at the daily range from the 28th. It's about right. I gotta be perfect. To the 29th, right? Okay. So now we see here. Opening prices here. Opening prices here. And what happened? You see that we had a false rally here. Or, well, excuse me, it's going to turn into a false rally, but we had the same thing happen here, right? The market opened and traders who were long would have been correct. But then we see the manipulation come into play. We see the manipulation come into play because the market turns around, targets these short-term lows. Here, we have liquidity engineered to the market. Sell stops here have been activated. Reprice higher. Again, attack this low that it just created. Engineering more liquidity into the market. And then we just experienced the manipulation cycle. Now, some traders, some people, even ICT himself, he will call this a Judas swing. He'll call this a Judas swing. And I'll scale out on a higher time frame. I'll scale out on the daily and show you all this exact power 3 concept on the daily, right? So here, see the manipulation. Here we have the engineering of liquidity. By inducement of sellers. And again, this is in an obvious bullish scenario. So engineering liquidity by inducement of sellers into the market because these sell stops have been activated. Then what do we see here? We see it's not too much here, right? But it is still there, right? An accumulation of long positions. Smart money bought. Now here, they came up here attacking old highs. And they'll be looking to reach for the previous day's highs. And we already determined that this was the high of this day. Let's see if it did reach, if it did in fact reach the previous day's high. Okay, so we see here's the previous day's high. If you just want to confirm, you can scroll back a little bit further. I know there's a couple hours left. Yep, that in fact was the previous day's high. Market opened up down here. So what do we see? So again, we seen that the previous day's high was attacked here. This is buy side liquidity. Guys, in the form of buy stops. I messed that up. This is the previous day's high, and there's buy side liquidity here. So what we have now, we have our manipulation. Have our manipulation here. We had our accumulation. All right, had our accumulation of long positions, and then price reached for old highs and attacked the previous day's high. Okay, and what we have now here, experience again, is a pairing of orders. And a distribution cycle. The distribution process of this daily cycle here. And what do we see happen? After this pairing of orders, we see an accumulation of short positions here. Market selling the highs here. Accumulation of sell positions. And then they end up repricing lower until the close of the day. So again, guys, you see that this happens almost on a daily basis, guys. And what you're looking for is a pattern, right? Looking for market to open, false rally, attack old highs in a bullish scenario. Looking for a pairing of orders. Looking to get out of these long positions, so they'll have to sell to pending buy interest. And that pending buy interest exists in the form of buy stops because they are pending orders waiting to be executed once market reaches here, so they can get on the breakout. Distribution ensued. Accumulation of shorts, repriced down to the next day. The next day, we had the same exact thing happen. We have opening of price here. Market opens, false rallies, accumulation of long positions, attacking old highs, reached into the previous day's high, pairing of order, sold out of long positions to pending buy interest, accumulation of shorts here, a lot of long accumulation of shorts, and price ended up repricing lower going into the next day. All right, guys, so this is the concept of manipulation, accumulation, and distribution in price expansion on a daily cycle. And I want to zoom out. I told you I was going to zoom out and show you guys this on a daily time frame. Show you guys this stuff happen on a daily time frame. Ooh, I'm gonna get rid of the stuff here so that we can actually see what's on the chart, because this looks ridiculous. All right. So what we're essentially gonna pay attention to are these vertical lines here, right? I'm gonna get rid of this stuff, guys. So I see where my lines need to be. Here. Here. And here. And this was the 2-day range that I was looking at. And what do we see? Price opens, false rally, trades higher. What happens? Oh, excuse me, trades higher, reaching for old highs. Didn't exactly reach this old high here, but there were still pending buy interests here that they were able to pair the orders with. We'll see a distribution cycle ensue, and price traded lower until the next day. Price open here, false rally or Judas swing. Then the price expanded up, reaching for old highs, taken out, and even into the previous day's high, and that was taken out as well too. So we had a pairing of orders because we had pending buy interests here, and because smart money bought down here, they need to sell out of their long positions here at a premium. Who would be willing to buy from them? Buy stops, pending buy orders. So we had a pairing of orders here. Distribution cycle ensued, and then price repriced lower, heading into the next day. So you can see that this is a pattern that you guys can follow in a bullish scenario. Open, false rally, trade higher. So next day opens, false rally, trades higher. Retraces lower, open, false rally, attacking old lows, trades higher, reaching for old highs, reprices lower into the next day, false rally, reaching for trades up, reaching for the previous day's highs, reaches the next previous day's highs, and even back here into these highs as well too. Pairing of orders ensues, distribution retraces lower into the next day, guys. So you can see this is the pattern, and you will see this pattern across all assets and on any time frames, guys. So again, remember, guys, the power of 3: manipulation, accumulation, and distribution. Hope you guys are able to gain some immense value from this presentation. I look forward to be able to give you guys the sauce on the next video. Until then, peace.